previously what we've kind of worked on is we've worked on the purchases journal, we've worked on the cash payments, and also in the cash payments journal. What 9.5 talks about is how do you journalize other transactions using a general journal. So if you notice, we're going to be using transactions that don't fit into the purchases journal, that don't fit into the purchases journal, or any other journal. So it's going to go into a general journal. The general journal is exactly the same that we've done before. The difference here is, you're going to notice the source documents, okay? Memorandums, debit memorandums are going to be used as your source document. That's going to kind of be your indicator that it doesn't really go anywhere else besides the general journal. A purchase invoice will go into the purchase journal. A check number will go into the cash payments journal. A cash receipts will go into the cash receipts journal, and we talk about that later. And our sales invoices will go into our sales journal. If it doesn't have those, then it's going to more than likely go into the general journal. Now, if we take a look real quick here, there's one difference in recording a general journal transaction that's different than what we've done in the past, and that's going to deal with just a slightly different thing that will ultimately be explained further, I think, in Chapter 11. So, if you notice here, our first transaction is bought store supplies on account from Displays Warehouse for $275, okay? So what we're going to do here is we're going to go to our October 5. We're going to do it just the same way that we normally do, okay? And then this is going to be supplies store, okay? And that's going to be my doc number in this case is going to be M39. So my M39. And basically because store supplies are an asset and I'm receiving an asset here, I'm going to ultimately debit that $275. Now, this is where the difference comes into play. So up to now, this transaction is completely normal. If you notice in this transaction, we bought them on account. So since we bought it on account, what is our credit going to be? On account or accounts payable, right? So we owe someone money, it's that liability. So in the past, up until now, we've always wrote accounts payable. And we wrote accounts payable Displays Warehouse. We still do the same thing. The difference is going to be, though, is we're going to write accounts payable Displays Warehouse, and we need to use this slash. Notice we need to use that slash in there. I'm previewing Chapter 11, but it's ultimately going to be going to help us when we post, because when we post, we're going to post to ultimately this transaction alone will get posted to 3 different ledgers. All right, because you have a controlling ledger and a subsidiary ledger. I'm previewing, I believe Chapter 12 is what I'm previewing. So what you do is when you see this slash here, this is your indicator that you need to put a slash in the post reference column. And then again, since it's a liability and it's on the right-hand side of the equation, therefore it's increased by a credit, we're going to do that and we're going to put it as a credit there. Okay? Does that make sense? This is really the only difference in 9.5. All these transactions are the same that you've seen before over and over. However, the thing is, you have to realize when you are using accounts payable or accounts receivable, from now on, you're going to do that slash in the general journal. Okay? When we're recording accounts receivable in the general journal, we're going to use that slash, and it's going to go into 2 different locations when we post at a later chapter. So the same thing would be, like I said, would be there. Other thing is just kind of remember here, if it's a purchase invoice, it goes in the purchase journal. If it's a check number, it's going to be in our cash payments journal. Okay, if it's your memorandum or debit memorandum, good rule of thumb is it's going to go in your general journal because we're not purchasing merchandise, we're not paying cash, receiving cash, or selling something. It kind of falls into every other area. The other, and that, I guess that's kind of it. So any questions? So on the return on merchandise, so like the next one, we talked about that. The return merchandise to Hendrick Products, so real quick here, the return merchandise, we're going to take that transaction. You're going to debit the accounts payable, right, because we bought merchandise from Hendricks. Now, it doesn't show it right now, but in a previous transaction in a previous month, we bought merchandise from Hendrix. So we returned 640 of it. So what we're going to do is we're going to do our accounts payable Hendrix. Okay, we're going to debit it because we're ultimately going to be decreasing it. Okay, but let's step before I get there. My debit memorandum is 25, so I'm going to do DM 25. Once again, notice the slash on the accounts payable. That is an indicator that I have to put a slash in the post reference for a future date. Okay, and it was for 640, so 640. And then my credit will be purchase returns and allowances. Purchase returns and allowances is a contra purchases account. What it does is it lowers the book value of our purchases. Why don't we just credit purchases? The reason being is by crediting purchases, it doesn't give us the story, right? We don't know how much was returned. We don't know how much was a discount. We don't know, we just know that our purchases is lower. Well, why is it lower? The way we get to that why is by using purchase returns and allowances. And so then we would credit that at 640. Okay? So purchase returns and allowances. Keep purchase returns and allowances separate from purchase discount. Purchase discount, remember, is we buy something on account, we pay it within the discount period, and then we get to pay that reduced price. Purchase returns and allowances is much like December 26th. Where you buy something, think of it as a consumer level, not necessarily a retailer's level, but when you go and return something, you have the physical product and you return it, that's a purchase return and allowance, to keep those two separate. Any other questions?